Forexia family, today we're looking at the USDZAR, the dollar versus the South African rand, and we're going to be diving deep into the midweek reversal signature trade strategy combo. This is a 70 to 90% win ratio on this pair using this specific strategy. And so we're just going to dive deep into exactly how the strategy works and how you can profit from the strategy. So what we're going to be looking for are multiple things. We're going to be looking for a midweek reversal. So the midweek reversal will happen either Wednesday or Thursday. If it doesn't happen Wednesday, it'll happen Thursday. And if it doesn't happen Thursday, it probably won't happen. We don't look for them on Friday. So midweek reversal, Wednesday or Thursday. Then we're going to be looking for before the midweek reversal, we actually look for the induction trend, which is basically the trend that starts in the beginning of the week. It can even start on Sunday or the previous week, Friday or Sunday, Monday, Tuesday, and sometimes goes into Wednesday if the midweek reversal didn't happen on Wednesday. So we're looking for the induction trend midweek reversal on Wednesday or Thursday and in combination with the signature trade. So if you guys don't know what the signature trade is, signature trade. If you don't know what the signature trade is, we have a bunch of videos on our previous channel that got banned. Actually, it's not banned yet, but it's about to be banned. So go find our previous channel and you can find all the videos on there. Or you can enroll into our signature trade course on our website, forexia.net. Or if you want to enroll into all of our courses at once, you can enroll into the Academy membership on our website, and you can get all of the courses, including the signature trade course. So let's start by looking for the induction trend. What exactly is the induction trend? Like I said, it is a trend that happens in the beginning of the week, Monday, Tuesday, Wednesday. And then once that trend is easily predictable via the masses, in other words, you can basically plot it out very easily. Here we can see a very good example of this induction trend starting Monday, Tuesday, and then going into Wednesday, Thursday. And basically what we want to look for is we want to plot our trend lines on the bottom trend line and the top trend line of this induction trend. So we'll just mark this out as the induction trend. And then what we want to look for is the signature trade. The signature trade is nothing more than the wedge pattern breakout that goes with the trend. This is inducing the retail traders to go one last time with the trend, and then what happens? The market reverses against them and hits their stop loss. So in this case, you guys can probably already see it. We have the very obvious wedge pattern right here. All of the retail traders that really don't know how to trade and they just trade simple patterns are going to be looking at this trend and looking at the wedge pattern, and they're going to be trading this breakout. They're going to be trading the breakout to the upside going with the trend. Notice what happens midweek. On Thursday, here at the bottom of my chart, you can see the days of the week, Monday, Tuesday, Wednesday, the induction trend. Come Thursday, we have that breakout to the highs. Once again, that is another confirmation. So after the signature trade, what we want to look for is a breakout to the highs with the trend, or vice versa to the lows if we're looking at a downtrend induction trend. So here we have a great example, And I'm going to be looking over multiple weeks just so you guys can see that it doesn't just happen once every full moon, right? It doesn't happen just once a month. It'll happen consecutively over sometimes multiple weeks at a time. So we are looking at, this is October 22nd, 2024. We're looking at this in almost real time. So this was the last week, the previous week. We had a perfect example of this induction trend, wedge, breakout, signature trade to the highs of the week, and then a reversal off of those highs come for that midweek reversal. So using all of this in combination, if you caught the trade at the highs right here, this was a 200 plus pip reversal. So let's say it was about 216 pips. 216 pip reversal. And what would we target? We would target the previous lows. So we would, in this case, we would target this previous low of the trend or this previous low as well. You could use 2 take profits here. And we can see price came exactly to this point. Because why do we know price was going to come to this point? Well, it would be obvious that if traders are trading this and seeing this as a breakout continuation of the trend, they're going to be placing their stop losses under these previous lows. So right here, let's just mark it out for you guys. So right around here and right around here. This is where the masses would be placing their stop losses. And we can see the price moved against the trend to get exactly to these 2 zones to hit the stop losses of the retail traders, of the masses that got induced by this induction trend. That's why it's called an induction trend. All right, on to the next week. Here we have the next week. We have Monday, Tuesday, Wednesday, Thursday, Friday, and we can see once again a very clear, obvious induction trend starting Monday, Tuesday, and coming into Wednesday. But where do we see the signature trade? So this is where the adaptability comes in. This is where basically experience and price prediction can come in, or price pattern recognition. That's what I wanted to say. All right, so here we have another pretty obvious induction trend with the signature trade wedge right here. We have the breakout to the highs. Once again, this is a confirmation. We're breaking out to the highs of the week. This would right here, I believe, is the previous week's high. So let's mark that out as well. There's going to be a lot of people buying the breakout of this previous week and the breakout of the high of the week. Notice how it happens right at the point of this wedge. It breaks out in the direction of the induction trend. That is very important. We always trade against the direction of the induction trend. Unlike the masses, when they trade with the induction trend, they're being induced, and basically their predictability is being used against them. This becomes a very predictable setup for the masses. They think it's going to be easy money just following the trend and following these easily predictable patterns, when in reality the patterns are used against them. And here we can see once again the price moves completely against them once breaking past the high midweek. And this was a 250 plus pip reversal. So here we have 250 plus pip reversal off of the highs. And notice these big wicks down right here, this big candlestick down right here, that is to hit the stop losses of the masses. Where would their stop losses be? Well, here's a good indication. This was a previous low of this trend right around here. And then if we look down a little bit more, Here we have another previous low where the masses are most likely placing their stop losses. And we can see those candles wicking right into those stop loss areas where the masses are going to have their stop losses placed when they're going with the trend. Okay? So here we have 2 consecutive weeks, 200 plus pips each. And then we have 1, 2, 3 weeks where we didn't actually have that a very good setup. We didn't have that perfect signature trade and the induction trend that we're looking for. However, we zoom in to the next week and we have a very obvious induction trend starting Monday, Tuesday, Wednesday. And then we have the signature trade here where it comes to a wedge formation, breakout past the high of the week, and then reverses off of that high. Okay? For Thursday, remember? So let's take the induction trend text and we'll copy it, put it right around here. Just so you guys can see how frequently this happens. So once again, obvious induction trend, breakout past the highs of the week, and then a reversal. This reversal right off of the highs was, let's see, 270 pips. If you're targeting this low, it would have been about 200 pips, 192 pips. If you're targeting this previous low right down here, that's almost 400 pips. So we'll just say it's about 250 pips again. Nice 250 pip reversal. And we have the obvious signature trade breaking out in the direction of the trend. All right. Then we move on to the next week. And we have, once again, starting Monday, Tuesday, Wednesday, we have that obvious induction trend. And this is where the pattern recognition comes in. Where would we see the signature trade? Signature trade wedge. Remember, we're looking for that wedge. It's a little bit bigger this time, but nonetheless, it is here. Another wedge formation, breaking out past the highs of the week, which would be right here on Monday. Come Wednesday, we have that wick to the high of the previous day, right around here. And then we have that reversal. What would be our first take profit level? It would be right down here, that low of this lower trend line, right around here. And if we caught the trade off of the highs like we're supposed to, this was about a 200 pip reversal from our first take profit level. And if you were to have just let the trade ride into Friday, that's almost 330 pips, maybe a little bit more. So we'll just say around 300 pips. Now let's look at the next week. Here we have obvious induction trend. Something to take note once again is that the breakout of the signature trade is always, almost always, going to be with the trend. We do have a complex version of the signature trade where they break out in both directions before moving in the intended direction against the trend. Now here we have the high of Monday. This would be the high of the week before we get to midweek. And then once again, we have that signature trade breaking out with the trend, right? Breaking out with the trend, topping out at the high of this previous structure here, the high of the week, and then reversing. Where would the first take profit be? It would be right under these lows of the week. If you caught it at that breakout, that's 170 plus pips. If you waited until Friday, that's over 200 pips. So we'll say about 200 pips potential. Now we just looked at 3 consecutive weeks in a row where this strategy played out. Going on the 4th week, we have the obvious induction trend starting Sunday, Monday, Tuesday, going into Wednesday. Then we can see the wedge pattern right around here. That's not the most perfect wedge there. It maybe looks a little bit better. But nonetheless, retail traders or the masses would call that an ascending wedge, and they would be buying the breakout of this wedge. Once again, we're targeting the highs after the breakout of the signature trade, right around here. And where would our first take profit level be? It would be right around here, these previous lows of this trend. Right here, and potentially right around here. And notice how in one candlestick, they go right for those lows. In total, this was almost a 270 pip move. Four consecutive weeks in a row where we see this pattern playing out. Then we have 1 week, 2 weeks where the pattern doesn't really play out for us. It just there's just a continuation of the trend. And then we have the next upcoming week where we see this is a little bit different. We have the downtrend, same concept though, just inverse. We have the downtrend, obvious induction trend. Induction trend. Then we have a signature trade, descending wedge, breaking out Thursday, midweek, past the lows of the week, and then reversing. And then they used the next week, Monday, to completely demolish all of the traders that got induced by this induction trend. So if you bought off of these lows and rode it up until the high of this trend this week, that is over 380 pips. So as you guys can see, there is massive potential for this strategy. It plays out almost every week. And it always has the same confirmations, the same characteristics, the same plays. We're always working with the same thing, just different variations. So once again, we have an induction trend. However, this time it is an uptrend. The next following week, induction trend. Here we have that pretty obvious signature trade where they break out past the highs of the week. And actually this looks like we're prematurely doing this, okay? It's actually right here. That was on Tuesday, I'm sorry. This one is on Wednesday, and then we have the midweek reversal on Thursday. Where would we target? Our target would be to the previous lows, the low structure of the trend, which would be right here. Let me draw this out a little bit better. So here is that induction trend, and then come Wednesday, Thursday, so they start creating the signature trade wedge pattern. The wedge pattern is a little bit easier to see if we zoom in. And then they target the high of the week upon the breakout of that wedge pattern. So from the high to this previous low structure is 214 pips. $214 pips. Then we have the next week. We don't have a trade. It looks like they kind of use this week to trade into the next week, and they use this week Monday, just how they used this previous Monday to hit the stops of the trend of the previous week. So let's kind of dissect that a little bit. So here we have that obvious induction trend once again. This time it is downtrending. Induction trend. Monday, Tuesday, Wednesday. And then come Wednesday, we see the pretty obvious wedge pattern right here inside of the trend. And then they break out once again past these lows of the week and then reverse off of these lows. So if we bought right around here on these lows of Thursday for the midweek reversal and held it until Monday, where would we have our target? Our target would be right around here. Well, there could be multiple targets, so we could have one here, one right around here, this previous structure here, here, and we could have one right up here. I'd like to have multiple take profit levels, position myself in as the induction trend is, or as the signature trade is breaking out with the induction trend. So if we bought right around here and then held it until the first take profit, that's 175 pips. Till the third take profit, that's 260 plus pips. All right, I'll let you guys count up the pips, but in total, this was 15 weeks that we analyzed. 15 weeks, and out of the 15 weeks, 9 weeks we had do this exact same structure. The induction trend, followed by the signature trade breakout with the trend, followed by the reversal of the trend. As you can tell, this is an extremely profitable trading setup. The USDZAR does the same thing over and over. I would keep going, but I don't want to just be, it's pretty easy to understand. I don't need to analyze 6 months of data for you guys to understand. This happens week in and week out. And if it hasn't happened for a week or two, give it another week or another week, and most likely you'll have 2 or 3 weeks in a row which it happens. Just like we saw right here where we had 4 consecutive weeks of this happening over and over and over. In total, this was what? 3, 4, 5, 6, 7, 8, 9, over 1,000 pips just in these 4 consecutive weeks. Obviously, if you're trading via proper risk management, using a stop loss, using a proper risk to reward ratio, it doesn't matter if you get stopped out 2 weeks in a row trying to catch the signature trade or the reversal of the trend, because it always plays out. Whether you have to wait a week, 2 weeks, 3 weeks, the risk reward is there. And for example here, 1,000 pips. Let's say you get stopped out 50 pips here, 50 pips here. Well, there you go. Have another winning week, 380 pips. Another winning week, 214 pips. Maybe you got stopped out here, 50, 60 pips. Then you have another winning week, 260 pips. You guys can see how profitable this strategy can be if you're able to master it. Okay? I'm not saying it's super easy to master, but it all comes down to pattern identification and following the signature trade. All right? If you guys want to message me, feel free to message me on Telegram. My Telegram is at DylanForexia or t.me/DylanForexia. I'll be happy to help you guys out. And also, if you want to learn more in-depth education on how this strategy works, we have individual courses on our website, forexia.net. We have a course on specifically tailored to the signature trade strategy, and we have a course specifically tailored to the USDZAR. So, as I mentioned earlier in this video, if you want to get all of the courses in one, we have a monthly membership on our website, forexia.net. It is the Forexia Academy. You enroll into the academy and you get all of the courses with your membership. All right. Thank you for tuning in. Peace out.